Hey everyone, Coach Investor back to another video for today. So it's another week, another breaking news with regards to banks. In this case, Swiss banks. Credit Suisse is going to be acquired by UBS, another gigantic Swiss bank. Now, Credit Suisse is known for a lot of things. For example, criminal conviction for allowing drug dealers to launder money in Bulgaria, entanglement in a Mozambique corruption case, a spying scandal involving a former employee and an executive, and a massive leak of client data to the media. Credit Suisse has also been fined $475 million over a corruption scandal involving Mozambique's tuna bonds. Credit Suisse was also involved in the Archegos scandal. Credit Suisse investment bankers allowed Archegos Capital to take voracious and potentially catastrophic risks that culminated in the United States hedge fund's spectacular collapse in March of last year. Actually, this was in March 2021. For those that don't know, Archegos Capital Management, a family office run by Bill Huang, was forced to liquidate its position in a number of stocks after it was unable to meet margin calls from its bank. The liquidation caused a significant drop in the stock prices of the companies involved and resulted in billions of dollars in losses for the banks that had lent money to Archegos, including Credit Suisse. Now, with all that said, Credit Suisse is also known for its banking services and investment. Now, like I said, it's going to get acquired by UBS, and of course, we have some comments from Jerome Powell and Janet Yellen. So, the capital and liquidity positions of the US banking systems are strong, and the US financial system is resilient. They said that in a statement, adding they have been in close contact with international counterparts. Of course, the Swiss regulators and Swiss Central Bank, the European Bank as well. Now, of course, we will soon hear what the Fed will decide when it comes to interest rates. Pause, cut, 25 basis points hike. Let's wait and see. I think the correct move right now is to halt, to pause it, just to create a bit of calmness in the market. Even though 25 basis points might make sense, right now pausing it might make sense, might calm the market, give the market a bit more time to figure out how to proceed from here. Now, we obviously have to talk about Warren Buffett in this video, which we're going to do as well. We're going to talk about Credit Suisse, UBS, and the different statements that both of these banks have released. Pretty funny, in my opinion. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, I would really appreciate that. And if you want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So first of all, we have the Swiss National Bank that has offered roughly $100 billion liquidity line to UBS as part of Credit Suisse deal. This is not a small thing to do, and this probably shows how serious things could have gotten if this deal was not accelerated, if they didn't push for UBS to acquire Credit Suisse, to merge with Credit Suisse. Depends who you're asking. Because if we go on UBS website, the investors relations, you can see here UBS to acquire Credit Suisse. Now, if we go to Credit Suisse website, they say here Credit Suisse and UBS to merge. So, acquisition or merger. Now, going back to UBS here, they give us a couple of points and extra information with regards to this deal. So they say here annual run rate of cost reduction of more than $8 billion expected by 2027. They say here that with the combination of both banks, the combined businesses will be a leading asset manager in Europe with invested assets of more than $1.5 trillion. Now, UBS chairman says this acquisition is attractive for UBS shareholders, but let us be clear, as far as Credit Suisse is concerned, this is an emergency rescue. We have structured a transaction which will preserve the value left in the business while limiting our downside exposure. Acquiring Credit Suisse capabilities in wealth asset management and Swiss universal banking will augment UBS strategy of growing its capital-light businesses. The transaction will bring benefits to clients and create long-term sustainable value for our investors. Now, UBS is going to pay around $3.2, $3.3 billion to acquire Credit Suisse, which is a huge discount because if you go back Friday, Credit Suisse's market cap was around $9 billion. If you go back to 2016, market cap $30 billion. If you go back even further, 2006, $70 billion. So yeah, What a downfall. Now, with regards to Credit Suisse shareholders, for those of you that still are Credit Suisse shareholder, you will receive 1 share of UBS for 22.48 shares in Credit Suisse as merger consideration. This exchange rate reflects a merger consideration of 3 billion Swiss francs for all shares in Credit Suisse, which again is around $3.3 billion. And now you might ask, okay, fine, thanks for the information, but what does Warren Buffett have to do with all of this? Well, I'm glad you asked, because apparently Warren Buffett has been talking to the Biden White House about a possible investment in regional banks, according to some reports here. Now, Warren Buffett, this is not the first time, maybe not even the last time, that he's going to look for great opportunities when times are turbulent. He did this with Goldman Sachs back in 2008. He did the same thing with his largest holding actually in the portfolio, Bank of America, back in 2011. So, story time. Back in 2011, Warren Buffett plowed $5 billion into Bank of America during the debt ceiling crisis of 2011. So, the story goes as follows. Believe it or not, Warren Buffett was taking a bath and he was thinking about his next investment. Because he recently invested in American Express and Geico and was thinking about maybe putting a bet in on Bank of America. So he called the bank, obviously an assistant, picked up the phone, and then somehow he got to the CEO, because obviously not everybody that calls the bank and asks for the CEO is going straight to the CEO. Eventually, he got to the CEO, asked to invest. They said they don't really need capital right now, and he's like, okay, I know, but that's why I'm calling. Take the capital, this is a good sign of confidence, and then you'll have ample cash, etc., etc. The transaction got done, I think, in around 24 hours or so. Bam, Bank of America became an investment for Warren Buffett. And so Berkshire would invest $5 billion in cash to Bank of America in return for $5 billion worth of preferred shares, which were redeemable at a 5% premium and paid a 5% annual dividend. Now, Berkshire also received stock warrant granting it the right to buy 700 million of the bank's common shares at a price of $7.14 per share. The warrants could be exercised at any point over the next decade. And so Warren Buffett waited to use the warrants until the annual dividends from 700 million common shares exceeded the $300 million in yearly income that Berkshire was receiving from its preferred stock. He exercised all the warrants in August 2017 and covered the $5 billion cost of doing so by giving up virtually all of Berkshire's preferred shares. Of course, if you do the math, and if you don't want to do the math, it says it here, the common shares it received were worth over $20 billion at the end of 2017, which means he more than tripled his money. Now, Buffett has been chasing another eureka moment ever since. I've spent a lot of time in the bathtub since, and nothing's come to me. Clearly, I either need a new bathtub or we've got to get to a different kind of market. And maybe now is the different kind of market. And of course, we're not done here. Here's the Goldman Sachs story. So, Warren Buffett's Berkshire Hathaway raked in more than $3 billion from its Goldman Sachs bailout. So, this was obviously in 2008. What happened there? So it received $5 billion in preferred stock, paying a 10% annual dividend, as well as warrants enabling it to buy 43.5 million of Goldman's common shares at $115 each at any point in the ensuing 5 years. And apparently back then he said this: it's been pointed out that our preferred is paying us $15 a second. So as we sit here, tick, 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 that's $15 every tick. I don't want those ticks to go away, I just love them. They go on at night when I sleep. Now over time he did start selling. Overall he got around plus 60% return on his investment. And in case you needed a little reminder, Bank of America, like I said, number 2 holding behind Apple. Apple is close to 39% of the whole portfolio, but Bank of America still a great investment for them. And so the questions are, how many banks will blow up in the coming weeks? How many banks will need to be, let's call it, bailed out in the coming weeks? And is Warren Buffett going to buy or invest in any of the regional banks or any of the banks that will need help? Do you have any clue or any answers? Let me know down in the comments below. What did you think about the Credit Suisse UBS merger acquisition? Do you think that big banks are slowly but surely having too much power, getting too much control over people's money? What do you think about that? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.